Macy's has ended its talks with Arkhouse and Brigade, foiling a $6.9 billion takeover. According to Retail Dive in March, Arkhouse and Brigade had offered $6.6 billion or $24 per share to take over the company, the department store said on Monday. The firms in June raised their bid to $24.80 per share, but failed to deliver a, quote, definitive, fully financed, and actionable proposal, end quote. Macy's has requested the best price firms were willing to pay, plus their, quote, fully negotiated commitment papers for all the debt and equity needed to finance the revised proposal, end quote. Arkhouse and Brigade had initiated their takeover proposal in December with an offer of $21 per share or $5.8 billion, which Macy's rejected back in January. Mohit, make some sense of all of this. What does this mean what should the industry make for Macy's future with this announcement?
I mean, listen, right? We all knew this was coming. If you really think about it, when this started in December, Macy's was very proactive in terms of their management, also talking about their new strategy in terms of what they're going to do. And that was three big pillars. One was strengthening the Macy's nameplate and really closing around 150 unproductive or lower productive stores, accelerating the growth they have been seeing in Blue Mercury and Bloomie's format, and then simplifying and modernizing their supply chain with really geared towards where the future is, and that's going to be omni in a department store format. The second lens to take here is, I mean, we all have seen what happened with Sears, and no management and board want to go down that direction. And you kind of step back and think about what is the real estate valued at, and different estimates out there, but anywhere from six to $12 billion. So the bid was at any point of time never convincing enough. It was on the lower end of the spectrum. I think as it relates to what the industry should be watching is probably three really important things. One,
okay,
can you be, or how relevant can you be as a department store with a smaller footprint of stores? That's number one. Number two is,
right.
How do consumers really respond on scale to a smaller department size? So if you kind of look at Macy's over the years, they've been talking about, a much curated, smaller store assortment, higher service levels. So you're not like, walking down in 60,000 square feet department store, which sounds sometimes like a ghost town, because you don't have enough labor there, right?
Yeah.
So
Yep.
that is two. But the third and the most important thing is, if you kind of look at where Macy's was 10 years ago, the peak of, where they were from a shareholder value perspective and how they have kind of come down in the last decade, it's very important to see with these changes, can Macy's really get back to driving growth in a profitable way? And something which the analysts and street would be excited by.
Yeah, Chris, Disa, what do you make of that? I mean, you have a rich background in this industry and category. Where do you think Macy's is headed?
It's interesting. I mean, I think there's a lot of headwinds right now, and it is about creating value for shareholders. Fundamentally, one of the big challenges that Macy's faces, along with other department stores, is that the assortments and product offerings tend to be the same. Because from a brand perspective, there's not the diversity that there used to be, 10, 15, 20 years ago in terms of product options. If you remember back in the day, Macy's would buy a certain products from a certain brand versus May Company, et cetera. And now, with the brands getting smarter and having one product offering, it's really hard to diversify. So then that begs the question, is this just a distribution point, or is there a reason for them to be and for consumers to go to the Macy's brand?
Yes.
I think Blue Mercury, Bloomingdale's, others, a little bit different, but for a core Macy's perspective, I think that's going to continue to be a challenge of how do they drive traffic, and given their current product offering.
Yeah. And it seems like there's a lot of time and energy, at least that's what Macy's is saying, spent on these dealings. And hopefully some of that time can now be reallocated to those concepts that are working, like the Blue Mercury, like the Bloomies, and even the small like go forward locations for Macy's. Chris Walton, take us home.
Yeah,
Where do you land?
I thought Chris's point's really good. I mean, we've said it before, but I thought he said it really well, which is the way I think about what he said is the value proposition of why a department store was originally built no longer matters. You don't need a place to see all these brands on display, right? There's so many avenues you can do that. And the other point I would make too is you have to wonder, like, did they just like phone this last thing in, $300 million, and like you and I were talking, like,
right.
that doesn't seem like a lot to
No.
increase the bid. It's like when you go buy a house, right? And they're like, okay, time to increase the bids. And the seller's got a lot of offers. You don't lowball that offer. You got to come in strong. And,
Right.
they didn't do that. So it makes me think this was just phoned in and it was done. But this won't be the last we see of this conversation. Maybe it is with these folks, but Macy's is going to continue to be in a tough spot and they're going to continue to have acquisition talks, I would think.